Well, that was the exciting part. Let me just add briefly to John's summary of the methodology that our survey, if you read the fine print closely, covers married couples who are not retired. This subset is a group that includes 54% of the U.S. population and about two-thirds of the income. And we picked a subgroup rather than doing everyone because it gets very confusing when you try to put single people together with married couples. I mean, you know, married couples are by definition 2+ people, 2+ the kids if they have them, and singles are 1, and it's just hard to compare incomes for one person versus 3 or 4. Also, you know, the tax treatment varies differently for the elderly in many states, so we didn't want to sort of confuse the information. So we have a subset here, but we have checked, and the drift of the results is similar whichever subset you do pick. You should also notice that the incomes, because we're doing married couples, you know, so there's 2 adults for starters, are higher than you'd see in some surveys. For instance, our lowest group, the income range is $0 to $26,000 approximately. And so we're not dealing with people who are sort of off the scale at the bottom. These are people that you know and love, maybe, who are actually paying these kinds of high taxes, and they're familiar situations for people. Because we did this by percent of the population in each state, you will see differences in the income levels in each state. And some states that have particularly unequal distributions of income will in particular have very rich people. However, we have checked, and the disparities did not seem to be driving the results we were finding in many cases. Now let's get to why this all matters part. You know, people say regressive, progressive, they're kind of big 3-syllable words, but why do they matter? Why does it matter whether the slope is this way or that way? Well, I'll tell you how it matters to most people. Let's start off, look at Washington and Vermont over there. Those are 2 states with about the same level of overall tax revenues. One of them very regressive, one of them pretty much flat. Now I mapped those on the same 2 scales so you can get an idea. Vermont raises about the same revenues as the state of Washington. And if you look at that chart, almost all the bars are lower. How much lower? Well, if Washington had Vermont's tax system, Vermont's tax rates, the bottom 80% of the population of Washington would pay about $1,000 a year less in state and local taxes. That's a lot of money. You could actually do better than that. I mean, Washington has a very regressive system. What if it had an even modestly progressive one? And what if those other states in our terrible 10 had even moderately progressive ones? And in our study, we did a little experiment on that. What we found, for example, for Washington, that if you flip those rates around, average families would pay $1,800 a year less in taxes. Overall, in all of our states, I wasn't a very aggressive flipper here. I took terrible 10 red lines here, turned them around into something that is just slightly progressive. And look what you get. You get an average tax cut for here, 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 and here of about $1,100 per family per year in these 10 states. So that's what the average families in those 10 states are paying extra because the wealthy people aren't paying their fair share. Extreme? Sure, the 10 worst states are an extreme case. But in almost every state, going to a more progressive system would be a very good deal for most families. Now, another thing that Mike talked about is the different kinds of taxes. And I just wanted to look briefly here at a summary of these different types of taxes and what they mean. The blue line looks at the average income taxes in this country, the state income taxes. And you can see it goes up with income. On average, tax is progressive. The green line is the property tax. It's regressive. And the red line are sales and excise taxes. Look at them. Almost 7% of the income of the poor people, 4% in the middle, 1% at the top. That's what's driving our results more than anything else, is that when a state relies heavily on those sales and excise taxes, it has to have a system that hurts people in the middle and the bottom to benefit the high-income people. It's also worth noting, by the way, and it's reported in our study, that some kinds of state and local taxes are deductible at the federal level, income taxes and property taxes. That means, in effect, that the federal government helps pay part of those taxes. On average, a fifth of all state and local income and property taxes are offset by these federal deductions. And at the highest income levels, it can be as much as 40%. So in the tables in the back of our study, we show what those mean for the states, and in fact, they have a very significant impact. Of course, they don't have much impact in a state like Washington with no income tax. So Washington is not just hurting its low and middle income families, it's also kind of shooting itself in the foot, because here's an opportunity to have the federal government pay part of your taxes, and Washington says, oh no, we'll just pay them all ourselves. So they just take that money out of their own economy by choice. Kind of strange. Well, let me conclude. Our report shows that state and local tax systems overall are very regressive. In fact, in most cases, as Mike said, it's hard to believe that people would design systems like this on purpose. Our report also shows very significant differences among the states in how they tax their residents, ranging from the outrageously unfair to the slightly progressive. These differences in tax philosophy make real dollars and cents differences in the taxes that middle and low-income people have to pay to support public services. And finally, our report shows that devolution may have a very significant impact on how we pay for government as a nation. It's an inescapable fact that unless states improve the fairness of their tax laws, a shift in responsibilities from the federal to the state level will inevitably mean that middle and low-income families will have to pay more for government services than they do today. We hope you'll find this study useful, not just for today's news, but as a resource in evaluating state tax systems and proposed changes to them in the future.